the question is, I'm just going to read it as read it out aloud as I'm reading it. So after the major bushfires in recent years, do you consider future climate, risks for property purchase areas? It's a good question. And look, I'm going back to the bushfires. So it was just before COVID, wasn't it? Gee, we've had a bad run. The fallout from those particular bushfires hasn't necessarily been on investment grade markets because they weren't really in and around investment grade markets as such. The fallout has been the lack of timber available because of the forest fires and burning down to facilitate renovations and construction, right? So that's actually been the fallout from the main fallout for property from those bushfires. Obviously, COVID came in and ruled out and overrode some of the potential fallouts. We do definitely look, and part of our due diligence checklist is flood checklists, noise overlays, bushfire overlays. Okay, and there's obviously contaminant overlays, some indigenous overlays and things that we look at. So we have an internal checklist. We're going through that and vetting those properties. Obviously cyclones, insurance policy, premiums, all of those things factor into our investment decision. But it definitely is. So probably to answer your question now more directly, Michael, it is factored into things in two ways, right? And I might just repeat the question there for everyone's benefit. After the major bushfires in recent years, do you consider future climate risk for property purchase areas? So yes, there is a direct impact on the property itself. If you buy a property in those areas, your insurance policies are going to be higher and it's going to inhibit the growth for that property ongoing because there's going to be less people who might want to buy it because the insurance costs, holding costs are higher, and they might not just want to buy and live in a bushfire risk area. Okay, so you're going to have substandard growth ongoing, and that's why it's a big no-no. Therefore, the value of the property as it stands now is lower. So you would expect a discount for a property in a flood zone or a bushfire high-risk area. It has a discount that is factored in. Now, ongoing, probably more at a macro level. I'm not sure if this was the intent of your question there, sir. At an ongoing macro level, are properties that are generally prone, or they might not be in a high risk designated area, but they might be in an area that may become one. Are they going to be less likely to have strong, or above average, or is the capital growth for that property going to be compromised into the future? Now we're starting to get down into some what if scenarios, some edge case scenarios. And we don't generally push the boundaries here, guys. Like we're not going out, we're buying regional properties, we're not going into leafy, low density owner occupier type areas. We're generally buying in and around very tight to strong, drivers of utility, hospitals, train line extensions, mass employment hubs in our capitals or in very strong regional centres, and we're in the inner ring of those centres. Okay, so we're not really on the periphery in and around those high bushfire risk areas. So, at a high level, I think it would have an impact, and this is just my opinion, on the macro climate change, climate risk, being ahead of that and being strategic in what we're doing. But as we are flowing through, we want to be making money today. If you think about this, would you prefer to make $1 today or $1 in 10 years' time? Well, I'll give it today, thanks, because then I've got 10 years worth of compounding growth on that dollar. So the more we can front end our growth, not hopefully at the expense of long-term growth, but the more we can front end our return on investment, the better we usually do. So in that case, it's about the 1, 3, 5, even up to 10-year time horizons, not the 50, 100-year time horizons, not the 30, 40-year time horizons. Because if that was the case, you'd probably all be moving down and buying and investing in Tasmania, or Southern Victoria, or, in the cooler climate areas. We still need to make a return on investment. And in that case, we're going into strong, stable, diversified economies, well away from, bushfire, flood risk. We don't play with those edge cases. We want uncompromised environments and properties.